Hey guys, welcome back. I hope you had a really great day trading today. So today was a big day. We didn't have any economic data or anything like that, but we did get rejected at the 200-day moving average. This is SPY. We're on the 30-minute time frame, so rejected at the 200-day moving average and the weekly 35 EMA. Weekly 35 EMA is a huge level. It is right here, and you could see how it defines the uptrend. When we do trade above it, it is a solid support, and once we get underneath it, it can be a pretty strong resistance as we make it back down to the 200-week moving average. I'm not saying that's where we're going right away, but something to think about. The weekly time frame, we do have a red signal line, and we did just get rejected today at that weekly 35 EMA. So that is absolutely a huge thing. And let's take a look at that 1-day time frame too. We have the 200-day moving average right in there, and let's take a look at that. We did drop underneath it here on March 7th, and we didn't really even have a fight at that level. We just dropped underneath, and then we have had a pretty decent size rebound back up to the 200-day moving average. So two incredibly important levels that we got rejected away from today. So right here, 35 EMA, right here, 200-day moving average. We opened with a small wick to the upside and then straight down. The bottom of the implied move today was 571. And actually, let's start with, we dropped underneath the 200-day moving average, underneath the 35 EMA, to the bottom of the implied move, underneath the bottom of the implied move, even the next day's implied move, and into this bull gap right here. So strong down day, still a red signal line here, and SPX, same thing over here. We opened with a drop underneath the 35 EMA on the weekly time frame, 200-day moving average, 35 EMA on the 30-minute time frame, and outside of the implied move. So open and drop. Bottom of the implied move was here at 57.35, and we did get into this up gap right here before curling up towards the end of the day. We do still have a red signal line here, plenty of room to go, and this 30-minute 200 moving average is still pointing downward. That is our momentum here. So the mission, if price does come down to the 30-minute 200 moving average, it needs to sit there long enough to turn that level upward. Otherwise, we're going to drop underneath it. SPY today closed down 1.19%. SPX down 1.12%. VIX came up 6.88%. And we did not close within the implied move today. So big down day. We did stay within today's trading range, the 30-day average volatility, but not the implied move that options had set out. And QQQ, same thing over here. We did see a rejection at that weekly 35 EMA and 200-day moving average, huge levels, and we got pushed right away. We didn't even touch it. QQQ didn't see any green today, just gapped down and dropped. So we took it first to the 35 EMA. You could see a little bit of indecision there with those wicks, and then we did drop out and we closed out this island gap. So it does turn out that this right here was a real bull trap. I thought it was so funny the way this closed on Monday, but it really was a true bull trap right here. So we dropped out after we closed that. That did not act as support. We took it all the way down to the trading range. So implied move was 488. Implied move on Thursday's contract 486, and we took it all the way down to the 30-day average volatility at 482 and closed a little bit above that level at 484. So weekly 35 EMA here, same thing. It really has defined the uptrend, and it is a big deal that we're seeing that level as resistance. In QQQ, we're either in an uptrend or a downtrend. And you could see how clearly that 35 EMA acts as support or resistance. So right here, underneath it, resistance, resistance, resistance. We got above it, support, support, and we're back underneath it. So 35 EMA, red signal line, bearish divergence. I don't know about you guys, but I'm definitely looking down at this level right here. All right, so QQQ today down 1.84%, and VXN closed up 7.15%, and we did not close within the implied move here today. Big thing to know for sure though is that rejection at the 35 EMA and 200-day moving average. And IWM today took another nosedive 2 days in a row, and we did open with a little pop and then a drop underneath this 35 EMA. So once we gapped up, we consolidated back to the 35 EMA, and that did not act as support. So we go to our backup level, which is the 30-minute 200 moving average. This 30-minute 200 moving average is not curling up. It is not buying it. So be careful here. We did drop into this island gap and almost completely closed it out. There is a little bit left, and we did take it all the way down to the bottom of the implied move. So 204 was the bottom of the implied move, and we did manage to stay within that level. I don't know if you guys remember a few days ago, I mentioned how IWM really is doing a great job of staying within the implied move. So IWM did close down 1.02%, RVX up 3.66%, and here we did close within the implied move. And DIA, the Dow Jones, we did open here with a little gap up and then a pop up to close this gap. And as soon as we popped up, we had that mean looking 1 hour 200 moving average right there, smacked us right back under the 30-minute 35 EMA. So let's take a closer look here. We did take it back down to this 30-minute 35 EMA, but just underneath that, we do have the weekly 35 EMA. So let's take IWM on the weekly time frame here. So, I'm sorry, this isn't IWM, this is DIA. DIA, we're just seeing a little bit of a wick above the 35 EMA. This is looking like a resistance level, and I know that it's a little premature to be pointing down, but that is what tends to happen when we start trading underneath the 35 EMA. Here we were just a lot closer to it. Here we weren't that far away, but we do return back to the mean, and that is currently at 360. Extended out, that would probably be about 377. So DIA, and DIA I consider as a leading indicator for market health. And look at right here, the last time we really saw a downtrend underneath the 35 EMA, once we tried to get above the 35 EMA here, you could see that there was just wicks and mostly selling and then pressure downward. So just keep an eye on that level. It's in our trading range, so it's not going to be difficult to see. We are sitting literally right on top of it. I'm still holding those 427, 429 bear call spreads from the beginning of the week, and that 1 hour 200 moving average really helped me by smacking price back into the trading range. So tomorrow we do have GDP in pre-market, so that is definitely something that could be moving the markets. All right, so that was a recap of today. Tomorrow's trading ranges are coming up next, and that video is for members only. So if you want to join, there is a link in the pinned comment, and we're going to go over tomorrow's entire trading range for all 5 tickers, and also there's going to be a link to the charts on TradingView so you can grab them. And as soon as you do join, you will get a notification as soon as that video is ready. So come join us in the VIP trading room and have fun tomorrow. Trade safe. Make sure you take profits when you're up, and I will see you guys tomorrow night.